We are back for the second great return of the trading battle. We're trading the FOMC meeting live. We've got the press conference, we've got a whole bunch of stuff on the line, and market volatility is expected to be incredibly high. Our two contestants going head to head in this trading battle. First, we'll be talking a little bit about Chris Pulver.
As always, great to be here, Nick.
Our second contestant, the one and only Akil Stokes.
Thank you. It's awesome to be here. We were talking earlier about this as well. Yeah, it should be interesting. It's going to be very fun. I'm excited to be here.
Chris, if you want to just give us just a slight overview of how you are prepped.
We've caught a little bit of a secret bid on the dollar. I have been pretty vocal the last couple months on not selling the dollar. But these last 4 days, the dollar's been up, which I did expect. So for today, looking at dollar crosses, I'm going to play probably something on euro dollar for either a bit of a continuation of the downside, or I'm going to see if we have, with all this news and volatility, if perhaps we have a bit of a flush, like a high, low, lower, high, lower, low. See if the dollar can kind of catch a bid down here. So I'll probably look at some combination of either trading euro dollar, pound dollar, Aussie dollar. And then I always want to look at something currency-wise around this, because we also have Bank of Japan. The yen is always a wild and crazy currency pair. I think the yen has made either, people very wealthy, or it's blown up all your accounts.
Same prompt to Akil. What is just a general framework? What are you watching here?
Because the Bank of Japan is pretty straightforward with what they want to do, you get some pretty nice directional moves. We haven't seen that a lot lately because we've been in this little tight consolidation, but pretty much when it moves, and you want to hope that you're on the right side of it. The news makes it even more interesting. And at the same time, as Chris mentioned, later tonight or tomorrow morning, depending on where you're located, we have Bank of Japan doing something very similar, where they just got the tariff deal done, and are they going to come out and say, hey, let's get back into a hiking cycle or something like that? Or, are they going to keep it calm? And again, in my experience, Bank of Japan has been pretty, straightforward with their intentions. And the difficult part about that is it tends to come at a time of low liquidity in the market, which just can add more turmoil to the situation. We've had an interesting kind of bigger and smaller rotation in oil. And what intrigued me this morning was the violation of not only this sideways consolidative level, but the violation of this double top right here. You're going to see that there's a 618 Fibonacci retracement right there. I'll also bring in a Fibonacci extension from our most recent swing low to swing high. And you're going to see that we have a 1618 Fibonacci extension lining up with that 618. We'll go ahead and get a long position on, see if we can ride this thing up.
I'm mixing it up. No combination trades. I'm actually going to look to fade this move. So I'm looking to sell 75 and 78.75 levels on oil, because every time we have made a poke above these recent highs, they tend to just have lower highs in the play. A high, lower high, lower high. So if we come back in and kind of find this inefficiency, I could see this market hitting about 75 and then pulling back to this really strong support around 70. Also strong support around 65. I think it's going to be difficult for oil to make a higher high. We have seen over the last several months, this goes back to, September of 2023, oil has not made higher highs.
The yen is at a important decision point right here, where we're retesting a previous level of structure. And so far we're holding. We're doing a little bit of a dance as expected today. I am going to look for a short trade here. I'll tell you why. Just from a fundamental perspective, right? I think it is likely that we get some type of confirmation or hint or clue that a September rate cut might happen. It's a combination of that and the fact that there is that bigger term idea of that, hey, if Japan does come out and say that we are going to get back into a hiking cycle, I think that is going to be a massive surprise to the market. I think that's going to move it drastically. But we're going to look to sell here on the dollar yen, getting short. And I'll go ahead and put that on.
As a pairs trade, I'm going to trade pound yen versus euro yen and do an opposite. I'll go long euro yen, short pound yen, try to go after a bigger winner. And so even if I can wash something like, I think dollar yen has kind of been on its own island because it's so much dollar influence right now. But if I put the euro yen versus pound yen, I'm going to try to go opposite. If I put Aussie yen, New Zealand yen, they should be going opposite. So those are a couple ways I can kind of sprinkle in some more Japanese yen exposure while trying to net a winner. That's kind of what I'm going to do. So
Both going a little bit more in favor of the Japanese yen. I don't know if anybody saw this, but copper just had a giant move lower. Chris, can you pull that up?
copper's been really disrupted after this. Oh my,
Copper bull.
regains this Chile CQF tariff exemption. Copper edges higher, focus on U.S. China trade talks. This is like an untradeable instrument, if you ask me. I would not touch this.
Our third challenge here is all about the indices.
So the beautiful thing about trading options is I'm literally fading the market every single day and just collecting call premium, call premium, call premium. It's been the easiest trade for me the last couple of weeks as we just melt up really slowly. We have not really seen a full extended move. Like rarely have we hit a 100% ETR on the day. So I'm just doing a lot of like option trading, selling these highs. I do think at the minimum we have a pullback coming. So if I go SPY, for example, we've got overbought conditions with divergence. I'm looking at this 21 period moving average, 50 period moving average, previous pullback to recent all-time highs. I mean, the hard part is, does this happen by Friday? Probably not. In fact, this market might not do anything today. Today could be a big nothing burger because the Fed is pausing, but press conference for Powell might shake things up a little bit. Copper seeing a move like that, who the heck knows, because this trade war stuff like is still out there and it is adding some friction to the global economy. I think I'm going to go short SPY because it's a little bit less volatile, and I'll go long Qs in case this thing melts up. Long Qs should be a little bit better. I might throw the Russell in there for good measure.
I am interested in shorts. I'd like to see a break of this level first. So we'll see how the news goes. We'll see what reaction there is. If we can violate those lows, that is a sign for a short for me. So I'm going to hold tight right now just because I don't have any type of signal. If we can do that, I'll be looking to get short here.
You guys have the opportunity to ambush each other's trading setups, which is a crazy prompt. But the basic idea here is you guys can pick what the other person has to trade.
Akil, I want you to place a trade on the euro pound.
Geez. All right, euro pound. I used to call this the molasses pair because I'd be in trades for like ages because it never really moved. I'm a structure-based trader, so I'm always looking for levels of structure to make my decisions whether long or short. I see that we've come into a previous level of structure, right? We have a little bit of structure looking left, right here. We have a little spike right here as well that we did break and close below, but then that got engulfed. I also see that as we came up, we put in a little bit of an ascending channel, but we also have that teamed with divergence on our RSI here. So pretty much the indicator is doing the opposite of what the price chart is doing, right? The problem is where to, and that's going to be the interesting thing. The level that stands out for me right now is down here. You can see a nice bearish candle right here with a long wick to the upside, showing us a little bit of a rejection. You can see a long wick to the upside here as well with a break and close below. So it's a little bit of a sign, a bearish sign for me. So we're going to go ahead and get short this, and that will be my position.
Akil, yeah, go ahead and pick Chris's.
All right, so I raised you the euro pound. I'll give you another one that's very similar from a different part of the world. Let's see what you have on the Aussie Kiwi. So Aussie New Zealand.
Yes, the Aussie Kiwi. I mean, so here's what I am doing in my personal portfolio is I'm just dollar cost averaging in at 107, 106, 105, 104, 103, 102, 101 parity. I'm long as far as the bigger picture. I think we get back to 111, 112, possibly 114. Now that the Aussie is slightly ahead as far as cash rate, I do like that it doesn't cost me anything to hold that position long. Here's what I'm going to do. I like the structure. I have a bit of a bullish tilt on this thing. This is all about timing. I mean, I could take the trade and have my long bias, but in 3 days, maybe I'm dead wrong. So I am going to look at a market level that I'm going to buy, and I'm going to kind of stay with this current trend and just see if off of this structure low, higher low, that if I start leveling in, possibly something like this, I will buy this pocket, buy this low, and hopefully we won't see price invalidate that level there. So I'm going to go market order and see if we can just make maybe a run to 110 this week on the Aussie. And if I get filled on these levels, I'm just looking to see if I can turn them in. I am going to size this one accordingly. So I'm going to go 1, 2, and 3 lots. So even if it does pull against me, I'm going to try to get at least a break even, because I do believe that this pair is also still very efficient. So even a, flush down could also find some support, bounce back up, find some efficiency again. So I'm going to size this accordingly, where even if I'm down on trade 1, I could possibly take a trade 2 and 3 that nets me out some profit. Looks like my first trade will be market at 109.08, and then I'm going to go into a 108.50. And then another one here, kind of a Hail Mary, hold the lows, the William Wallace trade at 107.55. So
All
those are the
right.
lows.
Play some William Wallace trade. I love it.
That's right.
Last thing I'll say, for everybody who was here, if you enjoyed this, the trading battle has revamped in 2025. We are back and stronger than ever, putting out some great content to help traders improve, with veteran experience being brought on camera. All of this, as I mentioned at the top of the show, sponsored by ACAP, making this sort of content more available to the average trader completely for free. The only thing we ask is that if you're enjoying this show, if you enjoyed this show and you want to see more content like this in the future, 2 things: hit the thumbs up button and subscribe to the Trading Battle here on YouTube. Akil, Chris, thank you both very much for joining me here, and I'm sure we will see you back again soon. Thanks so much for everybody for joining us, and we'll see you all next time. Bye, guys.